Afternoon, it's Quant Trade Edge with the wrap up for Monday, May 2nd. The special situation video we put out earlier on the S&P had this 15-minute structure, and at that time we were down in this bar right here. So taking out the high of that bar was a stop out for the short position that was initiated here, that was added to here. However, it ended up being an outside bar. So, that just happens. Outside bars completely trip up this system, this method of bar by bar, following the structure. And then if you, followed it down further, we got this bar here where we had a lower low, lower high, green candle, all that good stuff. And this also was an outside bar. So it gave you two fake outs. And then finally, when this bar went, and it wasn't a fake out, we are already at 3R on that, and it looks like it wants to squeeze higher into the close. So that's just the way the cookie crumbles with this. Take your 1R hits as they come, and go for the 3, 4, 8, etc. when they show up, and net things work out. So we've already covered the S&P quite a bit. I wanted to go over a couple of the other markets that worked out really well today. Crude oil was the first one, and in crude oil, we had a really good setup bar, and we took out the previous day low overnight. Let me take some of this mess out of here. And you can see that we first took out the previous day low right on the open, and we got one leg up. Then we had this two waves down. Once we got here, we also had one leg up, and then this other leg up did not even exceed the first leg up. And then we made a fresh low down here at 1 a.m., which is European Open. And then we got our very clean two waves up at that point. 1, 2, 3 right there. And I'll blow these up. So using that as your risk bar, and all of this happened from European pre-market to European opening range. And we got a very quick 8R down to $101, which was slightly past that. So it stopped just shy of 8R on that initial thrust, but then later we got it here at 645 as the US pre-market and opening happened. And as you can see on the crude oil daily chart, our range is compressing, right? First we had this big range, the second part of the triangle smaller, third part smaller, even smaller. And this is basically giving us an entire cycle. You can call it, what we would normally see as a Taylor cycle, got very, very compressed, and I can show it to you on a 15-minute chart. So if we put up our RSI to catch divergences, starting at the top here, there was not a divergence. This was somewhat of a climactic top, but we do have, we did have a clear trend line here and a trend line break. So a swing is going to end either with a climax or a divergence. So we didn't get a divergence, we got a climax. And when we got that trend line break, we started kind of the down part of the cycle. Now, this here was consolidation, and this was our 4x pattern, which ended up being 8x. So you get a U-turn, and then you get flags. And, in this situation, you got a one-legged flag, a one-legged flag, a one-legged flag, and then finally a two-legged flag that gave us our final push. And then down into this final push, you can see that we built a divergence, between 3:30 a.m. and 6:45 a.m. Between those lows, we built a divergence. And then here, if you blow up the structure again very cleanly, this is a hoagie here. So this is your first leg up of the structure. This is your leg down. This is your leg up. As soon as this bar went, that was a U-turn. And that U-turn coincides with, maybe not perfectly, but kind of in the vicinity of this trend line break. And remember, for trend line breaks, you want to see that the MACD is already turned up, and it already turned up in this congestion zone. So if you think of the choppy period of a market as the period of time when a divergence is forming, and then when you get your U-turn and trend line break, you're breaking out from that. And then once you break out from that, you start getting your one-legged pullbacks, and then typically your two-legged pullbacks can lead to the final thrust. So I just wanted to see if I have it up here on Twitter. Oh, might have to open a new window. Let's see. Whoop. You can see on the crude oil, I posted this 15-minute structure, ABC, right as we were breaking out from it at 102, I guess 102.60, this was 102.34. And that would be right here at this level. So that was probably where the picture was, and we've continued to go higher. And if we look forward for tomorrow, this is a really good setup for a 4x trade at this point to the long side, because this is a very good setup bar with a nice long lower tail, green body, and taking out that high would set up a 4x trade to the long side. On natural gas, we had a 4x trade set up there as well. And here, on Friday we had that lower low and a strong close, and taking out that high made for a 4x trade, and we got that takeout on a gap up. And on this gap up, and this, so basically since 5 p.m. and we're looking for a setup around pit open. I used the 30-minute chart to space that out. And here this is one leg up, one leg down, and then we made an absolute high here at 11 p.m. From that point in time, we had A, B, C down. And here you did have an outside bar, but this was not an outside bar that trapped you, because it went lower first and then higher. Then we had an inside bar, and then right at 7 a.m. we had this big doji bar. So this would have been your entry bar. And because that entry bar was so wide, we're barely hanging out at about probably 1R, 1.5R right now. But what this morphed into later in the day was also a volatility compression pattern. If we drop it down to, say, a 15-minute, and I posted this on Twitter as well, the volatility compression pattern, and it technically has not broken out yet. You would want it to see it go above this previous high of 55.3. But, let's filter for the right bars here. We can take out, we're not looking for ACs, we're looking for low ATR. And you can see that we started getting those bars in here, which just show that the volatility is compressed, which is what we see on the handle part of one of these. So, this is your beautiful cup, this is your handle. We've got volatility compression. If we were to break out this way, we would have a fairly tight stop. Breaking out at this point, this low here could probably be your stop, 742 versus the 755, 13 cents, not a whole lot for natural gas. And this also had a compressed cycle, much like crude, where you could see we actually did get a divergence here between here and here, and then we sold off and went sideways. And let me see, is there a trend line from here that we broke? Probably this one right here. We break this trend line and come on down, and then down here at the low there was a divergence, and we got this rally up to here, and actually we got an entire cycle kind of within a day here. If we look at just today's action, and this is a 15-minute chart, there's a divergence between this high and that high, and then we sold off. And as we sold off, we got a divergence down here at the bottom, and you can even, pick out the U-turn here. The trend line break can be a little bit subjective depending on how you draw the trend line, but here the U-turn is not subjective, and that's what I like about it. This wave down is bigger than the previous swing up. So when we took out this level, we had a 15-minute U-turn at 2:45 in the morning, went all the way into oversold territory, and then we got a divergence right here between this low and this spike low. And then as we rallied out of that, you could see where that U-turn was, because this spike up, this swing up was greater than this previous swing down. So when we took out the high of that swing, we had a U-turn to the upside. And what happened after that is just this compression here, where we're seeing it now in the bars, that we have volatility compression, where we're getting smaller and smaller bars, and we have this cup and handle type pattern that, if it were to break to the upside, gives us a very tight stop below. Better watch for that. Yep. So that's most of what we had today. I went in more detail on the S&P video that was unique to the special situation. But again, it's just very simple stuff here. On a 15-minute chart, from the open, we had a very clean A, B, C up, which set up our shorting opportunity. And then from there, we had an A, B, which then, when that breaks is your shorting opportunity. And then when that wave finally stopped, and remember, from early in the video, there were two fake outs because of the outside bars, this one and this one. But once that broke, we started doing a wave to the upside. And then you can see it forming already. This is technically a down wave. And this looks like our closing bar, 2:45 to 3 o'clock. It's probably going to go outside. We'll see. In which case, it won't be a down bar anymore. It'll be an up bar. But this is just how we read the structure. And when you're looking for a 15-minute U-turn, well, we just had this swing up greater than the previous swing down. So if we were to take this out, we now have a 15-minute U-turn, and we're starting an upcycle. And that U-turn often coincides with the trend line break. So let's put that up. Looks like we've already had the trend line break. And just to confirm with our MACD, it has crossed over, so that is a valid trend line break. So the trend line break and the U-turn don't always come in the same order, but they do roughly come around the same time. It's when the trend is switching from down to up. So, you have an uptrend that's running out of steam, it rolls over and breaks down, and then you have a full-fledged downtrend in which every reaction is sold. One-legged reaction, one-legged reaction, one-legged reaction, two-legged reaction. And then, two-legged reaction is sometimes, maybe in a textbook sense, a two-legged reaction is your final thrust in that direction, and then you lose momentum, like we did here, right? The momentum peaked on yesterday's close, and then we've, had these divergences forming, and we lost momentum to the downside, and now breaking this trend to the upside is the first sign, but then getting an actual U-turn would be a more confirming sign that the trend is now up. And that's all we're doing here. We're just looking for each of those situations, and if the bars aren't crazy wide, then that usually gives us an opportunity for asymmetric return relative to our risk. And then beyond that, just have a very short memory and keep reloading and repeating. So anyway, hope you stayed on the right side of things today, and have a good evening. Please hit that like button, subscribe, get notifications. I'm starting to put out some of the stuff that is timely, so notifications may help. And have a good evening.